Well, welcome back, everybody. I'm John Muschalek with HilltopSecurities, and I'm joined once again by Tom Kozlik, the Managing Director and Head of Public Policy and Municipal Strategy with us here at Hilltop. And we are coming at you with a virtual Muni Minute, given all that's going on in the market. Tom, look, we've been faced with a couple of different things since the Fed met back on September 17th, and they announced their 25 basis point cut, right? Markets have been moving around quite a bit. We've settled in a little bit now, but now we're hit with a federal government shutdown, and the markets are trying to digest, what's going on there and the implications of that. Normally, these are short-term disruptions, right? But we're trying to get to the bigger question of how will that ripple through and the macroeconomic performance, the economic data releases, and some of the state and local budgets. Again, these are normally short-lived, but, this one comes at a really heightened time of uncertainty. So what do you see the immediate effects of the shutdown on the macroeconomic conditions, municipal credit fundamentals, and investor sentiment? How's that gonna come through?
Yeah, on the one hand, John, it depends on how long this takes to get settled. Typically, these shutdowns only last a matter of a couple of days. A little over 5 years ago, there was one that where the government was shut down for a little over a month. From a macroeconomic perspective, typically there isn't much of a long-term negative macroeconomic impact. Typically what happens is that the economic activity that was going to happen during the shutdown time just moves a little later. It just happens. It happens. It still happens. It just happens a little later. So from a macroeconomic perspective, I'm not overly concerned about what the shutdown could mean. I think that there's going to be a lot of headline risk from a political perspective. From a municipal credit perspective, there's typically little to no impact to municipal credit from these things. So unless the shutdown goes on for quite some time, I'm really not expecting an impact to municipal credit. What I'm most concerned about that could be a little more long lasting is uncertainty related to a lack of visibility into data, right? Whether it be jobs data or other data. We're in a situation now where the macroeconomic picture has been weakening, and we really want to get some clarity about that, right? So that data helps, and if that data is delayed, it's going to make it more difficult for investors to understand what's happening out there.
Okay. Well, look, obviously the actions of the Fed are top of mind for everybody. We got a 25 basis point cut back in September. Next meeting is, I guess the 28th, 29th of October. So with all of that being said, markets are debating whether the FOMC will continue with the easing in October and in December. Inflation still lingers out there, right? But the growth signals are mixed, and the labor data remains a little bit on the weak side. So what's your base case for the Fed going forward over the next two meetings, and how might that shape our fixed income strategy?
So you and I have been talking for months about the situation that we're in right now, a situation where yields are likely to go lower, and that's going to be led in part by the Fed lowering its target rate. The Fed lowered its target rate by 25 basis points a couple of weeks ago. I'm expecting that the Fed is going to be data dependent, but kind of like what you just said, a lot of the data from a macroeconomic perspective, and especially from a labor market perspective, the data has been showing ongoing weakness. And so I think that coupled with whatever it is that comes out with regard to inflation is going to make it so the Fed is going to be likely to lower rates by at least another 25 basis points in October and December. But again, I go back to what I was just talking about, in that the lack of visibility with regard to data could raise the level of uncertainty where that's concerned, at least in the short term.
Okay. So I know, I saw the piece that came out recently that you put out called "The Secret's Out, Municipal Bonds Are Having a Moment." Not to be confused with the Muni Minute. This is municipal bonds are having a moment, and it highlights a surge in the municipal bond demand as well as the issuance side.
Yeah.
So can you explain more about the moment and walk us through the key drivers behind this moment and what you see as the biggest opportunities for investors leading into year end?
Yeah, so this might not be the best opportunity that we've seen this year to buy municipal bonds, but it's among the best. The best was probably several weeks ago when yields were higher, right after the Fed started lowering rates again. Yields fell about 30 basis points over the last week and a half. There was a little more momentum that took yields higher by 10 basis points or about 10 plus basis points. So I think that investors are getting an opportunity here to jump in before yields start dropping again. That being said, and I want to unpack this moment a little more because it's not just with regard to the yield situation that I was just talking about. One of the things that's going to end up happening in the month of October is that municipal issuance is expected to be 50 plus billion. That is well above the monthly average that we've seen this year. And then what I think is going to end up happening is that issuance is going to drop pretty significantly in November and December. And even in the month of September, issuance was a little lower than the monthly average that we've seen over the last in 2025. And there were lots of conversations that I was having with investors. They were telling me it was hard to find bonds, right? So what I'm talking to investors about now, at this moment in the month of October, is take advantage of the situation where issuance is going to be a little more plentiful, where yields are still relatively high. They're not at the generationally attractive levels that we saw a few weeks ago, but they are still at generationally attractive levels, right? So I think that investors need to be taking advantage of what the market is giving them and us in the month of October. And it's going to be a situation where, I think in November and December, issuance, because primary market issuance is going to fall and yields are going to be falling. It's not going to be as good of a situation.
Understood. We live in interesting times, no doubt.
It's a good moment. It's a good moment for municipal bonds, John.
Understood. All right. Well, that is the Muni Minute for this time. Thank you, everybody.